Mr. Chris Frostad, how are you on this lovely day?
Hello, Matt. Really good. It's
Good.
lovely here in Toronto today,
Yeah,
but it's supposed to change rather quickly. So I got to get
yeah.
this in before the clouds enter.
Glad to hear it. Glad to hear it. Well, look, we are going to get back to uranium. We've had
Yeah,
2 weeks of us ranting about the state of the market, and I guess there's be a little bit of that today, but we're going to do it in the context of how it's affecting and why it's affecting the uranium equities out there. Now, as usual, with your accountant background, you've been doing some numbers. Um, so why don't you talk us through those numbers? Because I think they're the beginning. They are the, I guess, hypothesis from which we will rage today. So what
yeah.
can you tell us?
Well, and I think there's always numbers. Um, I think a year ago both Cameco and Sprott had great optimism about 2024. And I got to think investors are getting quite frustrated with all of us because the spot price dropped, I think, about 23% last year. The term market was up a bit, but the developers were off between 20 and 25%. The explorers were all off by 20-25%. And if you remove Cameco, the producers are actually flat or down slightly on average. So it's a real head scratcher as to what's been going on, because all year we've talked so much about all the new demand for nuclear coming in, and all the AI and the data centers and the countries and the SMRs, and everybody's getting on the nuclear bandwagon, and the supply gap on the fuel just keeps getting wider and wider and wider. We've got all the geopolitical issues going on, and what's going on, so from an investor standpoint. Yet I keep seeing the spot going down. I keep seeing my portfolio going down. What the heck is going on? Is it time to abandon ship and go invest in Apple or something? Yeah.
The company,
The
not the
company. Well, you could become a farmer too. That's always
it's
the way to
it's a
go.
close run thing. Hey, well, like,
Yeah.
okay, so yeah, I think your analysis, you looked at 35 companies. I think you talked about two explorers and two developers up. That's it. The
That's
rest,
it. That's
not
it.
so much. Kind of depressing, but as you say, lots of fervor and excitement and commentary around the supply and demand gap, the fundamentals in the space, and this sort of long-awaited renaissance, as a word keeps being thrown at us, nuclear renaissance. But it's not gelling with equities. It's just not working. So this is in the context of a broader drop in equities. So it's not localized to uranium. So we got to acknowledge that and accept that. So it may not be. It's not you. It's me. It might be a case of the markets have destroyed enough value in the space that retail are just getting a bit bored. They've decided to, I say, go and try other things. The mining sector has also been quite good at destroying value more broadly. So that it's not in a good place at the moment, and that's for investors and companies alike, because clearly, as a result, the money has dried up. So what's going to change this year?
Well, I don't know what's going to change this year. I think it's the same story in that you've got, it's
I think that's the
raining up on the
problem. That's
mountain.
the
It's
problem,
raining
Chris.
up on the mountain, and we're waiting for the water to come out of the tap. And what's going on here? Well, it's got to go through a few dams and a few pipes and a few filtration systems, and that's kind of where we are. Because this again, and we've said this more and more over and over. It's a small market. It doesn't trade particularly often. I think the average number of trades a week in 2024 were 7 on the spot market.
You're kidding.
7. No,
Right.
on average. So I mean, there's more houses trading on my street than uranium getting traded. So it's a slow market, and nobody really has all the numbers. Nobody knows how much inventory the utilities are sitting on, how long they can hold out, when they really need to get in. Nobody knows what's going on truly on the contracting side, except for Cameco. That's kind of where we are. But what we can see, and what investors can see, is that the fundamentals still hold, and they continue to get better. better and better and better. The demand for nuclear is up, and the gap is getting wider. And at some point in time, that water has to start coming out of the tap. It's just, at what point do we see that investors are giving up, or at what point does it make sense to lick my wounds and move on? And maybe it doesn't. I mean, maybe it's the exact opposite. That's typically when people start, should be getting into things, is when when they appear to be the most dire. But the background fundamentals on this thing still hold. So I think you have to look at it as a longer term play, and you have to be even more diligent about what you're betting on and who's gonna be there.
Okay, so but what I'm trying to work out, what's a reasonable response to this situation? I think it's got to come back to, it depends what your investment strategy is, if you've got one.
Mm-hmm.
If maybe you just look at the types of investors and perhaps how they might respond. And I'm looking first at, perhaps people have been enticed into the space with promises of great things happening and AI data centers sucking up the world's energy supply. Those sorts of expectations are unrealistic. I think you did some analysis a couple of months ago, just before Christmas, where you looked at what SMRs would actually do and what micro reactors would actually do for the space in terms of nuclear driving that nuclear demand. It didn't amount to a whole bunch of beans, quite frankly, anytime soon. And the AI data centers, I don't think you looked upon that as the immediate solution to any of this as well. So do you think people kind of got sucked into a slightly euphoric, hyped up conversation?
I think the whole supply demand thing has been around for quite a while. I mean, when the World Nuclear Association put out their numbers, I don't know, probably 2 years ago now, year and a half ago, 2 years ago, the whole supply demand piece, and we all use that chart with the gap getting wider. I mean, their projections for 2022 and 2023, probably 2024, are already off by 10% on in terms of supply. It didn't come online.
No, I get it.
So I think when you talk about the SMRs and the data centers and yeah, I don't think they necessarily move the uranium needle, but again, it was for people that were already excited about uranium, people that already understood the fundamentals, and all of a sudden now there's a new reason to get excited about it. I mean, it's all important. It's not unimportant, all these things we talked about with the industry in general. It's just trying to line them up to come up with a timeline for when we're actually going to see, when it's going to be visible to mere mortals like us.
But you're talking about something slightly different there, okay? What you're talking about is the supply-demand gap increasing. Yeah, it is. I want to kind of focus in on some of the types of investors who will not like what's going on, will understand what's going on but be unhappy, or just be slightly, smug in the sense that their investment strategy is, long-term hold without worrying about it because it's coming to them. So this initial group of people have perhaps come in more recently,
mm-hmm.
Who've bought the hype, as we've seen a lot of in this space since 2019. Since I've been here, we've had all the hypes. We can say, from Section 232 stuff going on. Spot price going to hit $200 back in 2020 when the market was going crazy. All sorts of BS around that, without any kind of substance to that kind of commentary. We've had, obviously COVID kind of hit supply. COVID hit, companies putting assets into care and maintenance. Production being significantly reduced as a result. So lots of things going wrong on the supply side. The demand continues to rise, and as I say, whether it's big 5% increments or whatever, it's all building up. So that's fine. But the investor profiles is the important bit, because there's a lot of noise in the market, and that affects everyone else's thinking. Certainly when it comes to this sort of sentiment side of things. So this audience was coming recently, perhaps don't know as much, don't understand the difference between spot and contracting or term, whatever you want to call it. They're deeply unhappy at the moment. Is there any point trying to convince them otherwise?
I think yes, in that, and again, we talk about numbers and things as we graph things out and look at the price of uranium and whatnot, and you start putting all the events of the last year. I mean, there's been a lot of events in the last year that these investors you're talking about would have gotten excited about. When you look at it en masse, you see that none of those events caused a blink in the spot price or in the equities. Maybe a little blink, but not much of one. It was that crazy excitement. So I think because uranium doesn't seem to be moving like any other commodity, it's hard for people to if they've just jumped in and don't understand a lot of the underlying realities about this particular market, they're going to be confused and they're going to be frustrated and probably angry. But can they be convinced? Yeah, I think for sure. It's why wouldn't they be? It's not that difficult thesis when you put it forward. There's not that many moving parts in uranium. They're just different.
Right. One of the concerns I saw popping up again was on Trump's re-entry, obviously 47th president of the United States of America, and he's made some dramatic changes over the past week or so. I mean, just getting on with it is pretty impressive, actually. But we're talking about, right, he's told the Israelis to calm down in Palestine. He's I think meeting that, or Putin certainly meeting that. He's willing to have a conversation with Trump about some cessation of activities there. If that does happen, and there's a lot of things that got to go right for that to be the case. If Russia comes back into the fold to kind of shore up this kind of short-term transition and short-term security and ability to stand on its own 2 feet, if Russian supply comes back into market, and I'm talking obviously the enriched uranium there, but likewise maybe with maybe even with more from them, what does that do to the space? Does that sort of stretch timelines? Does that change a lot in terms of the funding ability of some of these companies?
I don't think it does anything, because when the sanctions got put in, again, if you look back at it, when the sanctions got put in, when it was seen that Kazatomprom was selling most of its product to the east, when all of these things were happening over the last year or so, it didn't affect it. You didn't see the spot price go through the roof. You didn't see equities go through the roof. You didn't see any of that movement, because the underlying it all is still the supply gap. I mean, when we talk about the supply gap, we're not working in this bifurcation of the market that we've talked about for the last year, that once again didn't really present itself in terms of pricing in the markets. We could see it happening, we could talk about it, but it didn't fall out the other end for investors in any way, shape, or form.
But Russia did sell twice as much enriched uranium into the US last year as the year before. Obviously trying to get a lot over the line. I'm sure utilities were trying to get a lot over the line before these sanctions came in, and also some of these.
They weren't selling as much as Americans were buying.
Yeah. So I think that's right. So you don't think there's another little hiccup coming here, which may cause?
Well, no, I think all it's done, all it's managed, it's smoothing out the line, and I think to the extent to you point out that a lot of the enriched stuff was picked up, has just put the utilities, the eastern or the western utilities, in a state to hang on even longer and let the market play out.
Okay, and let's look at some of the other things which kind of again driving this slight panic in the uranium in the context of a broader, equities fall off. But nevertheless, let's get into it. The geopolitical shifts, with regards to bans on Russian uranium and kind of reshaping supply chains, in the sense that all of that stuff, as you say, is heading east. That creates a massive gap and a massive problem that the West is going to have to solve for. And this transition period seems to be, I don't know if it's one that can be filled, certainly in terms of the enrichment, and even quite frankly in the ore to supply into that. So there's a big problem that needs to be solved. On the U308, Africa could be a solution, but again, the West seems to be moving much slower than China, much slower than Russia and others. So you're not worried about, it's great for you in this space, but you're not worried that there's going to be just massive gap the West is going to have to fill and maybe look towards alternative technology solutions, whether or conventional gas or whatever to kind of fill that gap. Why will uranium be the beneficiary of all of that?
Well, I think the gap isn't going away, and it is going.
Yeah, but
There is.
neither's the solution. The solution isn't there either. That's not going to be
Right.
brought forward as a result.
So it's coming. So why did spot prices drift down over the last year? Well, probably because there's a lot more contracting going on in the background. Probably because, as you pointed out, a lot of the utilities were prepared to sit back and let it. They've got enough inventory to watch all this stuff play out, because there was so much stuff going on in the last year. I think what we saw was a market that didn't panic, and they just they waited till the dust settled. But at the end of the day, the gap still exists, and the bifurcation still exists, and at some point it will start to present itself. But whether it presents itself as a hockey stick or just a gradual coming back, maybe 2024 will just look like the opposite of, or 2025 will look like the opposite of 2024. But it still has to happen. I think everybody you've had on this show has come up with the same conclusion at the end of the day. It has to go up. It has to. The numbers just...
Yeah, but again, if I'm putting my doubter's hat on, which is it's the answer. It's the answer I'm trying to get to, which is we all say the same thing, and we're all drinking the Kool-Aid, and we all need to believe it's the case because we're all invested heavily into this space, and doubting retailers on X and other kind of chat rooms and forums like that, quite rightly going, "Are you guys insane? This thing has been," and you hit the figures right out of this beginning of this conversation, which was like, it ain't been doing anything in any time recently. The last year has been a difficult one. In terms of kind of lost opportunity costs, do you blame people for looking elsewhere? Wouldn't it have been a more sensible strategy? Because this "it's just around the corner" thing only washes for so long.
In hindsight, yes. I mean, in hindsight, of course, there's the time value of money would not have supported the investment 5 years ago. But I think that's why we have to keep coming back to it and looking at it anew. Where are we today? You can lick your wounds on your old investments, and then some are up and some are down. But I mean, where are we today? I mean, are we at a bottom? Are we at a point in time where we got the spot price drifting around the bottom of what we used to know as the incentive price? We've got uranium equities that are all off, with one or two exceptions. Is this the time to be looking at those investments again? But I think that you have to look at them through a different lens. You got to get rid of the hype, got to get rid of the excitement, got to get rid of the panic, whatever you want to call it. Quit listening to people you don't know online, and really look at this stuff yourself. But I think the upside is definitely there. I believe it's there. I have to. That's my job. But I think investors need to be taking a clean look at it on a regular basis. Don't just buy it and hold it for 5-6 years and hope the world rights itself.
Well, but here's a thought for you, and for anyone listening or watching this, or even reading about it, is we have a bunch of analysts, because we do those analyst notes, and they're broadly positive. I'd say 60% positive analysis on companies which I think are quite good, and there's about 40% on companies which we think are perhaps wrongums, and we'll lay out, from people who've built mines, people who've made discoveries, who've operated companies, even some explorers in there. They've been around the block, right? But it comes back to what they always say, is like, it comes back to fundamentals. If you're a sentiment investor, right, you need the market to move for your company to be able to move, because all boats floating over high tide, all that kind of crap. It's like, there's something to that. But if your company fundamentally doesn't have some of the key attributes that it's going to need to be successful in the long term, so I'm not talking to short-term investors, we are long-term investors. So we look at through the market through that lens. And we've got this thing called Crux Investor Index, right? The Crux Investor Index is just a ratings, simple ratings thing on companies based on the things that we look for in terms of long-term holds, because we like to sit back and go along for the ride. We're not market day traders or anything like that. We're not clever enough like all of those people who do that are. But if you look at, say, things like, I'm just looking at something on the screen here. If you look at the companies that we've ranked, given us ranks, we do a real simple thing. We used to be so detailed and complicated, but no one cared. So we could score out of 10. Real simple. No one gets a 10 ever. There's no one perfect out there. Maybe you, Chris, but no companies that are perfect. So we say, right, out of all the sixes that we scored, like all the companies we scored 6 on for the last 12 months, the rolling 12-month number that says you'd have seen a 22% return. All of the sevens companies we scored 7. This across all metals, all commodities. You'd have got a 61% return on a 12-month rolling average. All the companies scored 8. You'd have got 78% rolling average. And the 9s, this is the slight disappointing, where you only got 52% return, right? And that's because I think as the bigger companies, they're slower moving beats. There's a lot less risk, but they're slower moving beats. So you look at that, but those things are all harnessed by looking at the fundamentals of the companies that you're looking at. And they're going to be different commodities in different jurisdictions and all of those wonderful things. And we've talked about this on numerous occasions. So our kind of Crux Investor Index is just here's a sort of guide to the sorts of companies that we think are good quality management teams, companies, right jurisdictions, good assets, and hopefully no one balls it up, or there's no sort of sector-wide implosion in the world of, copper or whatever, right? But for you've been a very big proponent of, and if we're going to keep this on uranium, what do people now have to look for in uranium companies if they are to succeed in this space and not kind of get paralyzed with inaction because they can only raise expensive capital? What would you say to investors?
I think, yeah, and I think you're right. And from our side of the fence, I think, yeah, too many of us on this side, we're banking on, the all boats rise notion of uranium prices are going to come back and we're all going to benefit from it. And that obviously hasn't proven out, because again, it's too short term. It's too limiting in terms of where you're going to go from there. But you're right. The fundamentals have to be there, and you have to keep changing your approach. And I mean, we've done a lot of this. I mean, I can talk about what we're doing. We've had to. I mean, we've been around since whenever. And the only reason we're still here is because we had to keep changing things up in how we were going to get to the next day, the next year, what have you, because we've been through this market up and down and inside and out. And, when we see the markets going sideways, we turn the dial down, and we quit spending money and quit trying to raise money. And when we see it going up, we do the opposite. But it's, I think, it comes back. I mean, if the question is what do investors need to look at if they're going to be investing in uranium today? I think you have to you do have to believe in all the fundamentals that we talk about, that everybody talks about. Certainly you have to believe that the sector is going to be there. But on a company by company basis, the stuff we've done complete episodes on, you have to look at the potential for M&A. Well, first and foremost, I think you need to look at the assets. And it doesn't have to be that deep a look, but you have to look at the assets and make sure that they are assets of worth and value. Certainly it's hard on the exploration side. One of the things we do is, because so many of our projects are being funded, alongside majors, they know, they're not going to invest in this stuff unless they've done their homework on it as well. So that helps investors to a certain degree, but you have to at least understand what those assets look at, where they came from, what was done before. Like you have to, and you don't have to look that deep, but you need to look at what they're doing. Are they just retwinning holes from 20 years ago? Or are they actually onto something here? And after that, you start to look at these other aspects. M&A is a big one. We went through a whole episode where we were matching up everybody see who's who and who's what and who had, and through that conversation, I think you start to understand things you may not have thought before, is why somebody is of value to somebody else, or how somebody is setting themselves up to be of value to somebody else. So you have to look at that. You have to look at jurisdictional risk. We did a whole series on that, and you have to layer these things in. And the funding and financing, I think, is probably one of the top ones. Is how are these companies going to fund themselves for not the next 6 months, for the next 5 years? Are they fundable? Or are you betting on a Hail Mary that this next drill program is going to bring it home? Otherwise, I'm selling off again, because this is a longer term play, and we've harped on that. This is not something that happens overnight. Anybody who's ever discovered anything certainly in northern Saskatchewan has spent tens of millions of dollars and years before they found it. So this is not an overnight thing. And if that's what you're betting on, if you're betting on somebody that's just for the first time opened up their lemonade stand on the corner of Saskatoon, they got, as good as they are and good as they may be, they've got a long haul ahead of them before they're going to make that big hit. You have to look at the management. You have to look at the spending. Where are they putting their money? How are they approaching this? Again, last week we spent the whole episode talking about that and how you look at those things. So I think investors have to go back to the basics, back to the fundamentals, and start evaluating all of these companies, like they're real companies that they want to invest in, and not some hype that they heard about. The other things, you have to understand who you're investing in. Is it a producer? Is it a developer? Is it an explorer? Because those investment decisions are based on completely different objectives from an investor standpoint. So there's layers of information, but what you can't just do is listen to the hype and close your eyes and throw a dart at a board full of uranium companies.
I agree. Look, I think there's a lot of people wound up because they made bets, bought in some of the hype, and made some bets which perhaps haven't worked out the way that they were told. I think you got to be man enough to go, that's on you though, right? That's on you. You had the data, it's your money. You should think about how you deploy your capital. So kind of try and end on a positive, because I haven't been ranting this week, which is really nice. Much. And it's a case of, you must have your own plan, okay? You have your own risk profile in terms of the type of person you're. If you're quite a nervous person, anxious person, don't do risky bets, because this is going to be a hell of a ride, right? Because guaranteed, most people investing will lose their money in this space, right? Just you're not equipped to do this. So it takes understanding who you are, have an honest conversation with yourself, understand the type of risk profile you've got. You've got to think about the kind of macro things that you understand and that you agree with, and then you can invest in those. If things like, and it's kind of skipping down to the uranium bit quite quickly, because we've talked enough about investing strategies in the past, is if uranium's not for you, don't commit it. Off you go. That's absolutely fine. Or go and get a uranium ETF if that makes you feel better. But no one's winning at the moment. I agree with you. You've got to have a longer investment horizon than we all thought. But yes, the fundamentals are there, and I've seen lots of people from VRIC and other conferences banging out the same trite comments, which we all need to believe are true, and luckily are true. But if you're coming into this space, don't bet your house on it. You just have this as part of your portfolio, okay? And that way you won't be so angry about the failure of the uranium equities this year, the last 12 months, to deliver against your wishes. So,
but I will point out one other thing too, is that overall, you're looking at a market that is off by 20 to 25% over the last year.
Yeah.
It shouldn't be. So are we looking at a market that is undervalued? And now is probably a better entry point than, but that's looking at it today. A year ago, we thought it was then as well. But
with hindsight capital, amazing people with money, hindsight capital. For people who buy the longer term thematic and understand that and are willing to, they're a bit the house and it's not so tense about it. They put a little bit of their portfolio into this one. Yeah, you probably, if you keep like loading up, you're going to be buying cheaper and cheaper, and hopefully, that's going to come off for you. But anyone can buying in today thinking they're going to be out in 6 months and life is good. You're not going to be. So don't do it, okay? Or reassess or readjust your thinking on this one. So I think uranium for me, still a big bet. Not selling, but I would say for the last 12 months, I've not been buying either, okay? Because it just has not, given us what we want. We've made 3 and 4 times our money on gold producers. It was obvious. I think we said it at the beginning of last year, or certainly wrote a lot about it at the beginning of last year. But I'm still not sure about, when I would get back into uranium on some of the projects which we're into. Do I see some newcomers to the space? It always makes me nervous because there's a lot more chat. What I would look to is probably see a lot more JV activity, a lot more acquisition activity, and I think that some of those companies, if I look at, well, like you're doing your thing with ISO Energy, I think that's, and you've already got Cameco in there, you've already got Urano in there, but they have been inactive for you for the last 3-4 years, not really kind of driving things forward. I think now the noises I'm hearing from Cameco, the noises I'm hearing from Urano, and obviously what I'm seeing with the ISO guys, with you guys, they'll be putting down some money. You'll be able to.
And that's the discussions going on right now with both Cameco and Urano is how do we put more money into this? We need to put more money into exploration on those projects where we see, because again, they've got a 5-10 year horizon compared to our 5-10 month horizon, and this is where they want to put their money right now. Those are the discussions we're having.
For Pure Point Uranium shareholders and prospective shareholders, that's good news. Of course. The more they put in the ground, more chance to have of success, and your piece of that, it becomes more valuable. So I think
it also validates the projects though as well, and I'm finding that's helping a lot as we're talking to people. In that the geology is always confusing to me even at times. So it's but to be able to say that we have people that are bigger people than us, who have no reason to promote the hell out of anything. Investing in this stuff must mean that their technical people have taken a look at it, and this is where they want to put their money. So that's helpful.
It's really helpful, and it comes to the way that I've started to look at it as a sort of not naive, because I've been in the uranium sector before, back in the last cycle. But listening to a lot of the hype in 2019 and 20, suck it all in. It's all must be true. Someone said it. I've been looking more and more, and I've taken that learning into other metals as well. It's what is industry doing or not doing? How quickly are they moving? How quickly are they, in your case, like deploying capital? Are they on the ground? What were the inventory levels? I don't think anyone, quite frankly, I'm slightly irritated by that. And the political movement, came about not as a result of, anything we thought in 2019 or 20. It came about because of high energy cost environment. That's what it came about. Politicians finally felt their permission to talk about nuclear as a result. So however we got here we are. It's a much better, stronger environment on the demand side. It's a pretty weak, really piss poor supply market as we see it, and that's great for prices, great for companies like yours positioning yourself for success. There are others, of course, but there's also still a lot of crap in the market. So Chris, I thank you again. Great conversation. I do appreciate these conversations from you. What are we going to talk about next week?
Oh, I don't know. Maybe SMRs.
We say that every week, don't we? We don't know what we're going to talk about. And here we are, an hour later, every single time.
I know.
And I think not with kind of vacuous, trite statements as well. So that's what I kind of like about these things. These are sort of actionable conversations. As they maybe you think about what do you do in terms of redeploying capital, reallocating capital, withdrawing capital, sitting back, and picking the right horse. So.
Mm-hmm.
let's go for it next week.
Something will come up. Something will come up.
Something always
It
does.
always does.
Okay, sir. Well, I'm going to leave you, and we'll see you next week.
Great. Thanks, Matt.